Hey, it's my first video. Today I'm looking and talking about buying into companies, whether it be a value stock or it be a stock you just think is good. So part of how the market is right now, as you see the date, July 7th, uh, right now the market's really choppy, so it's harder to buy good deals and value stocks. So back in March, like I bought UPS at $89, and now it's over 100. So it's hard to get a deal like that again. So if I want to buy a company like Microsoft, what I have to do is be willing to average in. Hopefully, I can get a good price over time. So what I like to do is say I have $2,500. I like to take a chunk of that because I don't want to try to buy a million different times. I want to have a good size of my portfolio in a few good stocks. So I would take 25% of that $225,000, as I messed the number up, of that $2,500, and that's $625. Now, what I'm gonna do with that number, that's the amount I'm willing to put into a company. In this case, I'm saying Microsoft. So I would take 12% and put that in initially. Then after that, I would put 8%. Then after that, I'd put 5%. So that's hopefully as the price goes up or down, I'm getting a better cost on that stock. Right now, it's pretty difficult to find value stocks. So I'm going to look for, let's just say, a company that has positive cash flow that I have as a value stock. It's showing 198 stocks for today. Now, I've been tracking the market for many days in a row. So I've seen a lot of these companies. Many of them are like very consumer facing. So I bought some iPharma, it's a perfume company. There's plenty of fashion companies. There's a lot of healthcare. There's some banks. So everything that's low right now is gonna stay low. Like this company Enos Inc. I was looking at this and it's like they make business products. So this is a value stock in that it's lower than what it's been trading at over the last year or 2 years, it's lower than the average of the last year or 2 years. But getting a good return on this could take a year or 2 years based on when this pandemic ends. So buying into a value stock, you're very limited right now. So right now, one of the best ways to invest is probably fractional shares. Right now, only a few companies have it, but fractional shares will allow you to get into the companies that you believe in at a good price. So here's one of the companies I looked at back in June. This is a company I was really interested in. I called it the Amazon of Latin America. This company pretty much is Amazon, but you know, not as big and probably more ambitious, where they do a lot of different things. A lot of them are to do with like lending and transportation and online payments and online stores. So they're a company you would say is probably growing. So if you look back in November, they were $482. To buy into this company now, you really need to average in because it's grown and grown and grown because everybody's buying technology. So this is a company that you probably want to have fractional shares in because one share is now costing over $1,000 and you want to average in over time. So I'm more of a value investor than a growth investor. But right now it's really difficult to find value stocks because pretty much everybody's bought up everything that has good growth potential, and everything else that's still low is everything that's going to take a long time to come back. So for example, I bought $50 in fractional shares, $50 of Xerox, not because I love Xerox, but I know eventually we'll have to go back to the office. And so when it does, I expect that to go up. But it was really more of a speculative play. So this is what Xerox was looking like when I bought it. So yeah, Xerox has a dividend. Their profit margin, this is back from their earnings date was back in March. The profit margin is over 13. Their return on assets 4, return on equity 10. They have plenty of cash. They can pay for their debt for the most part, and they have a lot of leverage free cash flow. These are some of the things I'm looking for. And you can see I have their potential down 77%, which is based off of their 12 or 24 month moving average. Whatever one's lower is what I'm looking at. I see a company that's going to rebound as soon as we go back into the office, but it's probably going to take some time for it to come back. So I really don't want to buy too many of these types of companies. So that's what's really happening with value investing right now. So on the growth side, there's one big company that people always talk about. It's Tesla. Tesla's been growing. So is it a good time to buy Tesla? Well, right now we have their 3-month moving, or the 3-month RSI at 91. So they're still not making money yet, but they're growing, and so is their stock price. Their stock price is really reflecting it. So it's like, when do I buy into it? Well, if you want Tesla, now's probably not the time to buy it. You probably need to wait until something happens. So that's really the balance of where we are with growth versus value. With value, you're looking for a company that's trading cheaper than what it probably should be at. With growth, you got to decide, hey, can I buy it now? Or if I do buy it now, am I willing to keep buying it? Because that's really what you need to do with a growth stock. Keep buying it, and hopefully, with these growth stocks, that they'll get you the good return that you need going forward, even though we're kind of at all-time highs.